and welcome to the Small Business Tax Savings Podcast, powered by Jetro and Associates. Get ready for another action-packed episode from our team that will help you save time, taxes, and keep more money in your pocket.
Everyone, it's Derek Kellett, CPA here for Jetro and Associates. We just wanted to do a quick video here and a quick podcast for you in regards to some of the changes to the meals and entertainment expenses. As you guys may have been aware, there was the Tax Cuts and Jobs Act of 2017. And one of the main things there that changed for small business owners like yourself is that entertainment expenses are no longer deductible. They used to be 50% deductible, and that can be a big change. It's a big line item as an expense for small business owners, and we just want to make you aware of the changes there and give you some real world examples of how things should be classified and how things should be deducted for tax purposes. So with this change, we expect a little bit more scrutiny from the IRS. We expect them to be looking in this area a lot because of the changes that were made, especially going into effect in 2018. So we just want to make sure that we're, classifying meals, entertainment, anything related to meals and entertainment properly going forward. So in the past, as a small business owner, you may have, taken your clients to see a baseball game, a football game, a basketball game, maybe a concert, a play, a show, some kind of theater. And you were able to deduct that if you were talking about business. So 50% of that was able to be deducted, including maybe you took them out for meals, drinks before. As long as you were talking about business, that was 50% deductible. With the new Tax Cuts and Jobs Act of 2017, effective in 2018, entertainment expense, there is no deduction at all. So we just wanted to kind of give you some examples of what kind of things to expect and maybe some real world examples of questions you may have. We just kind of wanted to do this video for you. So in the past, when you were, let's say you were going out to eat, you're taking your client to the Milwaukee Brewers game, for example. You guys go out to eat, you have a few drinks, and then you go to the baseball game. You were able to deduct 50% of that meal, 50% of the drinks, and 50% of the cost to get into the baseball game. Now there technically is no deduction for that entertainment expense. Now the meals could, if you we're specifically talking about business. That would be 50% deductible in the meals, but everything else would not be deductible. In the past, as you can see here in this little visual, we have club memberships, let's say your country club, a gym membership, things like that for yourself or for your clients. There is no deduction for that. However, one of the big things that we see that's still available as an option is it may kind of fall into the entertainment or meals category, is when you have a company party, let's say an office holiday party, your business is celebrating 5 years in business, you're having an anniversary picnic. So any kind of food associated with that as a thank you for your clients, as a thank you for your employees, and for yourself, that is 100% deductible. Now, any entertainment involved in that, you hire a DJ or you pay for everybody to go to a basketball game, let's say, or a theater, something like that, that would not be deductible. But the meals, the actual food involved when it is a celebratory situation as a business, that part, the meals are 100% deductible as they were in the past. So that's a good kind of thing to keep in mind. So if you are still planning on doing that, that will still be deductible. But if you're planning on taking your clients, entertaining them, trying to close the deal by taking them to a sporting event or the theater, that's not going to be deductible. So now what I wanted to do is just kind of walk through a few real world examples of how we want to classify things and what entertainment, meals, kind of traveling in these situations would be deductible. So let's say, for example, let's say today I have a golf event. A lot of business is conducted on the golf course, a lot of meetings, and a lot of times small businesses will sponsor or they'll participate in golf tournaments, they'll sponsor them, and you're able to get a deduction in the past. So let's say, for example, you pay $5,000 to attend a local nonprofit's golf outing. And at this golf outing, there's going to be, networking opportunities for you, prospective clients for your small businesses. So you pay $5,000. You're a sponsor. You're also going to get to play in the tournament, and you're also going to be receiving, drinks and food. So as a small business, in the past, you were able to deduct the majority of those expenses. So let's say you receive a letter, a thank you. Here's what you contributed to the golf tournament. Here's your breakdown. So $3,500 of that was sponsorship of a hole. So you kind of got advertising for your company. They put your name at the hole, that kind of thing. People are recognizing it's a business networking opportunity for yourself. The green fees, let's just say $1,000 just to kind of make it easy. That's, the cost of you and your foursome or however many employees or people that you paid to play. And then the lunch and drinks that were provided to you at a value of $500. So that adds up to $5,000. So for the whole sponsorship, we're able to deduct that as sponsorship expenses. So payments for sponsoring events such as charity dinners or golf outings, though we want to basically identify them or classify them in your accounting software, in your general ledger as sponsorship expenses separate, so we can get a deduction for those. The green fees associated with this golf tournament are going to be classified as entertainment because it's a recreational activity. So your employees, you pay for some clients. That's not going to be deductible in 2018. So I just want to keep that in mind. And then the lunch or drinks that you received as part of this would be entertainment related meals. So this is where it's kind of a gray area. We don't have the exact guidance yet, but if it's just entertainment related meals and business was not specifically discussed. So let's say at this golf event, the business, probably wasn't the only thing that was being discussed. It probably wasn't the primary reason for the meal. It was probably for the not-for-profit, whatever sponsorship, whatever the cause was for that you attended the tournament. That could be, that was probably the main reason that you and other people were there. So that was probably an entertainment related meal. And to be on the safe side, there's not going to be any deduction on that. So that's for a golf event. That's probably a pretty typical, pretty reoccurring thing that many of you may find yourself in that situation. So we just want to keep track of those expenses properly so we don't get into any, raise any red flags with the IRS. Now, here's another example where you're meeting a client, you're taking them out, this kind of thing, and we're going to see what's deductible and what's not deductible. Let's say you drive, let's say you live in the suburbs, you drive into the city to meet a potential client, you have dinner with them, and you discuss business. After discussing that business at the meal, you take them to a sporting event, and then you drive home. So the expenses for the mileage to and from meeting with that client, those should be recorded as your typical business mileage, travelage mileage. You're going to get the standard deduction or actual expenses depending on how you want to classify those or how you have in the past on your tax return. And then for the meals where you were talking about business with a prospective client or with a current client, that's going to be a meal expense that is 50% deductible because business was being conducted. You guys were talking about business, prospects, any kind of deals or things that you're working on. And then the sporting event tickets, even if you continued that conversation regarding the business or a deal or any kind of potential relationship that you're working on, that's going to be considered entertainment expenses here in 2018. There's not going to be any deduction for that. Now, the final example I have for you is a little bit different. So you drive to meet a client, you attend a sporting event where the substantial business is discussed at the sporting event, and there wasn't really meals per se. You didn't go to a restaurant, you didn't go to a fast casual restaurant or a bar before. You just went straight to the sporting event to meet the client. This is a little bit of a different situation. So those are going to want to be tracked as entertainment mileage instead of just travel mileage, regular business. So that's going to be a little bit of a different deduction and a different way of classifying things. So we just want to do that. We can talk about that in a different video when we go more into detail about exactly how meals are going to be tracked. And then your drinks for the night, let's say you buy drinks, you buy some popcorn, something like that with your client, that's going to be 50% deductible since you're talking about business there only. So those would be considered the meals. And then the sporting event tickets, as in the other example and how I spoke at the beginning of the recording, is they're in 2018, they're unfortunately not going to be deductible. So just to kind of summarize, we with the Tax Cuts and Jobs Act, there's some different ways of classifying meals and entertainment. We just want to be careful how we're doing that. And we just hope that this video and this recording kind of gives you a little bit of insight into that. So if you have any questions, you can call us or you can email us at tax@jetrotax.com. We'd be happy to answer those for you. If you want, you can revisit this video. So just some of the main changes are that entertainment expenses are no longer deductible. Meals are 50% deductible depending on the situation. We just want to be careful there. So that about wraps it up. We'll be doing some more videos with changes to the Tax Cuts and Jobs Act in the future. But thank you for watching or listening, and have a great day.
This has been another episode of the Small Business Tax Savings Podcast from the team at Jetro and Associates. If you have any questions, feel free to email them. tax@jetrotax.com. We have packages for small business owners starting at just $75 a month. If you enjoyed our podcast, please take the time out to give us a 5-star review in iTunes or wherever you listen. This helps us to bring you useful tips to help you grow your small business. Thanks for listening and have a great day.